Okay, we are now welcoming Ted Karkus, the CEO of ProPhase Labs.
Thank you all very much for joining me, and thank you for those joining me online. There's no way I can do this presentation justice in 25 minutes. I don't know how the last presenter did it in 15 minutes, but I will go very quickly. I'm available today, tomorrow. I have one-on-ones. I'm booked literally the entire day, but I'm available after this if anybody has any follow-up questions. All right, so with that, ProPhase Labs. First of all, I got to give a shout out to Robert Kraft. He's put together a phenomenal conference. It seems to get better every year. And I also have to give a shout out. I have a phenomenal relationship with our investment bankers at Think Equity. I have a 3.5-year partnership with them. Our company, as a MicroCap company, is in very good hands with them. I'd also mention that we're covered with research by Think Equity, by Diamond Equity Research, also AC Wainwright, among others. So with that, I'll assume you've all read the forward-looking statement. Everything I say is from the heart, is the truth today, but of course things can change in the future. I can't guarantee the future. All right. I always like to start with this slide. I'm not going to spend a lot of time on it today. The bottom line is I come from the investment banking world 40 years ago. I've been investing in small cap development stage stocks for 40 years. The one thing I've learned over 40 years is that, quite frankly, most managements are excited about their company. Hopefully they're optimistic, but when it comes to execution, they don't actually execute. And the one thing I can tell you is I have a history of executing on behalf of our shareholders. I'm the largest shareholder in our company. Personal friends of mine are the other largest shareholders. I've been personally involved in this company since 1996, and I took over control as an activist shareholder because I was disappointed in how the prior management managed the company. And just to go back a quick step, because I think that my background is important. To me, it's really the most important thing in investing in MicroCap is understanding management. So I got involved. In 40 years, I've invested in all these different companies. I would tell my friends they would invest, never collected a penny from anybody. I just did it. I like helping people. I like helping people make money. It's hokey, but it's a part of what I do. I take it all very personally, and I work my butt off on behalf of our company. So there's a company called ID Biomedical up in Canada, a biotech company. I seem to get involved with a lot of healthcare companies. They seem to have the most upside. And this was a company floundering. I literally got involved and forced out the CEO, promoted 2 guys underneath him, did 2 financings from a company that was virtually going bankrupt with a $25 million market cap. 7 years later, it was sold for $1.4 billion. I don't take credit for the sale, but I do take credit for the whole turnaround of the company. And with that experience, I did the same thing in our company. Our company, 12 years ago, was trading at 65 cents a share. That's when I turned it around. Since that time, our stock's down in the last year. It's probably down 50, 60%. But still, if you're a long-term investor with me, since I turned around the company in 2012, your total return's about 11 times because our stock is up from 65 cents, where it's around $5 right now. And we paid out $2.40 in special dividends. I'm a big believer in stock buybacks when the stock's low. I'm a big believer in special dividends when we have extra cash. That's, I think, like a shareholder. And so with that said, with our company, when I took over control, we had a company potentially going bankrupt. Stock was at 65 cents. I overinvested in advertising to turn around a brand called Cold Ease Cold Remedy. Zinc lozenge, most of you have heard of it. I ended up selling that brand for $50 million. I literally fired almost everybody in our headquarters and started from scratch. Fired all of our vendors and consultants, turned around the brand, sold it. We kept the manufacturing facility, and this manufacturing facility now, fast forward 10 years later, has enormous value, could have as much value as the entire market cap of our company. It's not what I'm excited about. So I'm going to tell you a story today about 3 or 4 subsidiaries in our company, the first of which I'm not excited about, but the value of it is exploding right now. It's probably worth somewhere around the market cap of our company. Certainly, I think I'll be able to sell it by the end of the year for the market cap of our company if I want to, but that's not what I'm excited about. But I'm going to start with that division, and then I'll get into others. So with that, Pharmaloz Manufacturing. We do something very simple and basic. We manufacture lozenges. We still, to this day, even though I sold the Cold Ease brand now 7 years ago, it feels like yesterday, we still manufacture for Cold Ease. We manufacture for over a dozen other customers. In the last 2 years, 3 years, 4 years, the demand for lozenges continues to grow not only in the United States, but globally. At the same time, the manufacturing capacity of lozenges has shrunk, both globally and in the United States, and particularly capacity for lozenge manufacturing for facilities that are FDA inspected. So all of these lozenge brands, first of all, they're not new brands. There are large cough, cold brands out there that provide liquids. You all know the names. They all want to introduce lozenges. And at the same time, the largest lozenge brands in the world are all looking for more manufacturing capacity. So we are inundated with interest from demand around the world. So we're building capacity at our manufacturing facility as quickly as we can. So to put this all in perspective, we did about $9.3 million last year and lost a little bit of money. This is at PharmaLoz. So now for this year, we increased prices on everybody. They all accepted the price increase. They honestly don't have a choice because we have others lined up to take their place. And we brought in new automation equipment that significantly increased our capacity with the price increases. So all of a sudden today, we've gone from losing money to making money in this business, just a small amount of money right now. But as we build the capacity, as we sign on the new customers, our revenues at PharmaLoz are growing exponentially going forward, starting right now. So you'll see minor improvements in the second quarter. You'll see big improvements in the third quarter, even bigger improvements in the fourth quarter. So we're going to go from $9.3 million in revenues last year and losing money to, by the second half of this year, we should be an annualized run rate. We could be at an annualized run rate for the second half of the year of $25, $30 million or more pretty easily, and generating in the neighborhood of $5, $6 million in earnings. That's just in the second half of the year, and then it grows from there. Ultimately, as we build capacity, we expect to have capacity of somewhere around 40, maybe even $50 million of revenues by year end, entering 2025. And then we have two more lines, manufacturing lines, that we're looking to add at the end of the year. We're adding one more manufacturing line in the next month or two. And then next year, early next year, we're adding two more lines. We can get up to 100 million of capacity. We have two large lozenge brands, any one of which could fill up all of our capacity on our next line. So when I talk about the numbers, and I'm going through this very quickly, this business next year could easily be doing 50 million in revenues, 75 million in revenues, numbers like that, with 25% net profit margins. It's a huge number. So understand, ultimately, at this business within a year could be worth more than the entire market cap of our company. So that's a little bit, I'll answer questions at the end if we have time. So let's move on. So just to go back to the background just very quickly, after I sold the Cold-EEZE brand, we kept the manufacturing facility, which I just talked about. We then got into the COVID testing business. I'd never been in the lab business before. In fact, originally our company, because we were flush with cash, was looking for investments. We invested in another lab that was perfectly situated at the very first month that COVID hit. And I was like, oh my God, this could be a huge business. I just want to invest in their company to make a return for our shareholders. Turned out they took the money, squandered it. They went out of business. I said, forget it, I'll do it myself. And I built, and when I say our management team, it was more others than me, we built a COVID testing business that did approximately $200 million in revenues in 2 years. In a business, I had never been in the lab business before. And actually, it was my son who built out the business. He had never been in the lab business either, and he's the one who actually generated those revenues. But I can't give him all the credit. We have a fantastic team. We have an IT team led by a gentleman who's simply brilliant in IT. We're fortunate to have him. And so with the money that we made in COVID, all of a sudden our company went from a company that lost money for many years while we developed the Cold-EEZE brand. Then we sold the Cold-EEZE brand for $50 million. Then we went into the COVID testing business. First 6 months, we lost money while we invested and built out a lab. The theory was, if you build it, they will come. And sure enough, they came and our business exploded. So we made all this money for 2 years. Investors got all excited. At one point, our stock, was $15. Now it's back around $5 because we went from a company making money to now we're back to being a development stage company again, which isn't a bad thing because every other time I've been a development stage company or worked on development stage companies, we've developed enormous value, and we're doing it right now again. So during the 3 years of COVID, while we were testing, We worked very closely with our investment bankers at Think Equity. We made other acquisitions. I cherry-picked, went through 300 acquisitions, found the 2 or 3 best assets, which I thought had the most potential. This is during a time when microcaps are so struggling financially to raise capital. We've been in a bear market in microcaps, literally for over 3 years. We started to bounce back a little bit this year, and then when we found out inflation staying high, interest rates aren't coming down, the microcaps went right back down again. At some point, microcaps, all the money that's gone into the bull market and the big cap stocks, at some point it's going to flow into the microcaps. I can't tell you when. So all these companies were struggling though, had no way to raise capital, and so we cherry-picked the best 2 or 3 acquisitions. That's what we're developing now, and that's what has enormous potential. These are assets that were under development for several years before we acquired them, and now we've spent several years developing them. One of them is Nebula Genomics. So Nebula Genomics was founded by a gentleman named George Church, world-renowned in the field of genomics over the last 15 or 20 years, a Harvard PhD, simply brilliant in the field, founded Nebula Genomics with his 2 PhD students. We acquired the company. The 2 PhD students came to work for us. And George rarely does this, agreed to be on our advisory board. He's connected to virtually every major genomics company in the world. He's introduced us to most, if not all, of his relationships. And our little company is building a world-class genomics laboratory and business. So it's a little bit, also George, when we acquired Nebula, he could have cashed out, and instead he chose to take stock at $7.50 a share. That's how much he believes in Nebula and what we're going to do with it. All right. So what is whole genome sequencing? The reason why most people don't know what whole genome sequencing is because historically it was so expensive. It's come down dramatically in price to a point where it's now almost affordable to the average consumer. So when you think about ancestry testing studies less than 1% of your DNA. So it's very inexpensive to do an ancestry sequencing test called the SNP-based test. It's great if all you want is ancestry information because with the 1% of the DNA that the ancestry test studies, you can connect people around the world. However, think about it logically. If you want to learn about your health, obviously a whole genome sequencing test, which studies your entire DNA, is going to give you significantly more information. From a point of view of measuring the data, a whole genome sequencing test can have 3, 5, 10,000 times as much data as an ancestry test. It just gives you an idea. So what is it that's special about whole genome sequencing? So it studies your entire DNA, gives you deep insights into diseases that you might be predisposed to based on your genetic makeup. So for example, in this example, gastroesophageal reflux disease, or GERD. If you're predisposed to this and you get that acid in your stomach, you might want to go to the GI sooner and really check and make sure you're not developing esophageal cancer. I'm going to have more to talk about that in a moment because we've developed a phenomenal esophageal cancer test. Coincidentally, maybe actually not such a coincidence, that's the way we use that as an example. But another example, colonoscopy. If you're at high risk of colon cancer, then instead of waiting until you're 50 years old, which what the insurance companies do, you might want to get your first colonoscopy at 40 or even 35 if you're genetically predisposed and at higher risk to colon cancer. So learning about your genetic makeup is a great way to think about preventative health, to lead a healthier life and to avoid certain diseases. Same thing with breast cancer. If you're at high risk of breast cancer based on your genetic makeup, get the checkups more regularly. So it just gives you some examples. Just as importantly, or maybe even more importantly, God forbid you get a disease, you get a cancer, how do you treat it? Turns out 2 people can get the exact same cancer, take the exact same drug, it works on one and it doesn't work on the other. Or the cancer drug, all cancer drugs are great at killing cancer cells, but they also kill healthy cells. So you want to minimize the dose. So what's the right dose? It turns out for 2 people, one person needs a high dose, one person needs a low dose. If the person based on their genetic makeup only needs a low dose, why would you give them a high dose and potentially kill them when just knowing your genetic makeup could save the life instead of the person dying of cancer? Those are just some examples. I don't have time to go through more of this. This presentation is on our website, ProPhaseLabs.com. You can review it yourself. We update it regularly. Also, I go through this very quickly right now. I do something called Renmark presentations, video presentations. I love keeping our shareholders up to date. I do this about once a month. In a few weeks, we're reporting earnings. I will be doing a virtual conference call where you can ask questions. I do a 30-minute presentation just like today, but then it's also a 30-minute Q&A. There's so much going on with Nebula. I'll just tell you very quickly, we developed this bioinformatics platform where people can order the whole genome sequencing test, but then they get this enormous library that people love to subscribe to. It has over 325 reports like the examples I just gave you. We're giving updates every week on clinical studies taking place around the world. So we can sell our whole genome sequencing test. We've built a world-class laboratory in New York, and because of that, we're attracting a lot of businesses and a lot of people who didn't want us spending our specimens abroad. So now that we're doing it in New York, we're attracting a lot of B2B interest. That business could really take off in the second half of this year. So that's a little bit about Nebula and the future goals. I have to move on. ProPhase Biopharma, checking the time here, we're pretty good. All right. Be Smart esophageal cancer test. Esophageal cancer is one of the deadliest cancers. It's also the fastest growing cancer in the United States, if not in the world. It occurs when either you're overweight or you develop acid in your stomach regularly. That acid in your stomach, your esophagus is connected to your stomach. When you develop that acid over and over again, the acid starts to eat away at the bottom of your esophagus. It develops. So when you have that acid in your stomach regularly, that's called GERD, gastroesophageal reflux disease. When that happens over and over again over the years and eats away at the bottom of your esophagus, it develops precancerous cells. That's a condition known as Barrett's esophagus. People with Barrett's esophagus have between a 1 in 50 and 1 in 100 chance of developing esophageal cancer. The reason that's so serious is because if you're diagnosed with esophageal cancer, approximately 80% of the people or more die of esophageal cancer in 3 to 5 years. So it's one of the deadliest cancers. And so while 1 in 50 or 1 in 100 doesn't sound like a lot, if you're that person that's at risk of developing esophageal cancer, you're going to go to your GI regularly. You get something called an endoscopy. An endoscopy is where they take 7 to 9 tissue specimens. They go through your throat, they take them out of your esophagus, and then they study them under a microscope. The problem is 2 pathologists can study the exact same specimen under the exact same microscope. One will tell you have esophageal cancer, and one will tell you don't. It's an incredibly inexact science. There's no test in the world that can tell you accurately whether or not you have esophageal cancer or whether or not you're developing it. We have a test unlike anything in the world. It literally has multi-billion-dollar potential and has 0 value in our stock price right now. It's really an incredible situation. And if we were in a bull market instead of a bear market, maybe people would be paying attention. But we're looking to commercialize it later this year. This is just advantages versus blood tests. I hear about blood tests every now and again. So just to understand the concept, our tests, we're not telling anybody to get an endoscopy, but if you're already getting an endoscopy, our test is simply have to take one of those specimens, in fact, just a sliver of one of those specimens, run it in our lab where we process it. We can tell you with an incredibly high degree of certainty whether or not you have esophageal cancer now, compared to a blood test. In order for a blood test to be accurate, the cancer has to first develop in the tissue. Then once it develops in the tissue, it has to make its way into the blood system. When it initially makes its way into the blood system, you have so much blood in your body, it's diluted. It is almost impossible to pick up on a blood test. Furthermore, you have other diseases. Even a cough cold could show up in your blood. There are other things that could show up that look like esophageal cancer that aren't. So you get a lot of false positives, you get a lot of false negatives. A blood test, there's no blood test that's even considered accurate, and typically it's done in conjunction with endoscopies. But there's nothing like our test on the market today. So to give you an idea of the opportunity, right now there are about 70 million endoscopies performed every year just in our country. And most of them are people with with GERD. If you have a bad case of GERD and/or you already have Barrett's esophagus, that's where you're already developing precancerous cells. That's about 7 million endoscopies per year in this country. Those are the initial endoscopies that we are targeting. We're not telling anybody to get an endoscopy, but if you're already getting one, we're saying take our test, have the GI send us one specimen. We can tell you with almost certainty whether or not you have esophageal cancer. More importantly, we've been already talking to the insurance companies. The insurance companies say, That's great if you can tell a person if they have esophageal cancer, but if 80 to 90% of the people are going to die, as an insurance company, doesn't do us much good. There's nothing we can do about it. What they're more interested in, and I understand, I don't want to be, crude about it, but insurance companies are about, actuarial tables. They're all about life expectancy. They're all about what it's going to cost them. All right. So what they told us, what they really care about is if our test can tell you if you're at high risk or low risk. If you're at high risk, you can get a procedure called an ablation. It destroys the precancerous cells. It saves the person's life. It saves the insurance company a fortune. On the other hand, if you're at low risk, you don't have to get an endoscopy every year. There's 70 million endoscopies per year, $2,000 to $4,000 per endoscopy. We're talking about tens and tens of, if not hundreds of billions of dollars. So just on the 7 million endoscopies per year on people that are at higher risk, that either have a bad case of GERD and or already have Barrett's esophagus, we're suggesting those people do our test. We're anticipating, we're in the final stages. It's been under development for more than 6 years. We have a ton of IP. I spent a fortune on 2 law firms to make sure everything's patent protected. We had breakthrough science on the 8 proteins that are specifically responsible, that are expressed differently when you're developing esophageal cancer. And so with that proprietary information, we've developed this test. So we're developing, if you're at high risk, low risk, whether you have cancer, so we're developing a new system around it. And so for the 7 million endoscopies we're going after, we hope and believe we're going to get reimbursed $1,000 to $2,000 per test. That is a $7 to $14 billion market we're going after. All right, even if it was $2 billion. And you got to understand, this isn't a multi-billion-dollar market where there's competition. There's no competition. You can't tell me we have 5 minutes left. I'm just getting started here. All right. I'll just tell you very, very quickly, Equivir, it's a broad-based antiviral. I personally turned around and sold the Cold-EEZE brand for $50 million. This is like Cold-EEZE on steroids. We've gotten amazing results. We could introduce this right now as a dietary supplement, but I'm finishing up some clinical studies because I know that in the dietary supplement world, you're only as good as the claims on the packaging. So I want really good, strong claims on the packaging. We're almost done with a very large study, more than 300 people. The first half of it's done, got phenomenal results. As soon as that's done, we're going to commercialize Equivir. We're going to sell into the same 40,000 food, drug, and mass stores that we sold Cold-EEZE into. We have an entire infrastructure in place for selling. And then the last thing, just press release this. It's really exciting. We have a database from Nebula Genomics built over 6 years, 130 countries of testing. We have one of the most diverse genomic databases in the world. And understand what I described to you before about ancestry tests versus whole genome sequencing. Imagine the amount of data that we've built in 6 years of doing whole genome sequencing tests on 130 people around the world. We have one of the most intense databases in the world. It is an untapped, hidden asset in our company. We've now developed an AI platform that's going to leverage this enormous database. We decided to do this because we met with a bunch of these AI companies, biotech AI companies, and we built a platform just as good, or if not better. I have a world-class IT team that built a phenomenal AI platform, but an AI platform is only as good as the information you feed into it. So when we saw how excited these other AI companies are, one of them is a really large global company, we were like, hey, we should be doing this ourselves. So we built a phenomenal AI platform. We're leveraging this enormous database, one of the best, most diverse in the world, the equivalent of 150 million ancestry tests. That's how big our database is. And we're initially leveraging our proprietary know-how in esophageal cancer to look for something called anti-drug conjugates that could potentially cure esophageal cancer. So what we're doing is we're taking our esophageal cancer test and the know-how there to the next level to now look for therapeutics. But with our AI platform and with our database, we should be years ahead of anybody else starting research in that area. Enormous potential. Again, I believe that our Pharmalabs manufacturing facility within a year is going to be worth more than the whole market cap of our company. I potentially have the opportunity to sell it right now for a lot of money. Or we have 2 of the largest lozenge brands in the world. We have a second manufacturing line that's going to be installed in the next couple of months. Lots of brands want to use up that second line. We're already at capacity in the first line. The second line will take us to like $40 or $50 million a year of annualized revenues with 25% net profit margins. And it's just a matter of how quickly that business goes. We're losing money right now. We went from making money during COVID testing to a development stage company. We're going to lose money for the next couple of quarters. But once you get into the second half of the year, the numbers are going to start to take off. And we're going to be a very different company entering 2025. That's about 80–90% of what I wanted to say, investment highlights and so forth. Any quick questions? She's going to kick me out of here in about a minute. Yes, sir. It's just a broad-based antiviral. We're doing a test on cough, cold, flu, COVID. We're not going to be able to say anything about COVID on the label, but in the dietary supplement world, what the FDA really wants and what class action attorneys, they'll jump on you if you don't have 100, like 2 studies of 50 people each in it. Our study is over 300 people, 2 arms, and we're testing both therapeutically, if you get sick, to treat you, as well as prophylactically take it once a day to prevent getting sick. And the results so far have been fantastic, and we're just waiting for that study to be completed. Any other questions? I think I just made it under time. What? One more?
So, shortly after the NIQ news came out at that time,
we can talk about that afterwards. Interestingly, we did I think, was it an 8K filing recently that we're not issuing any shares for the next 60 days. Somebody took that, meaning that we're going to go raise money. We're not currently looking to raise money. I should mention quickly, as I said, I potentially could sell the Formula's manufacturing facility right now for a lot of money, or later in the year, or one of the large lozenge brands could give us a large block of money up front to tie up the entire capacity of the second line that's about to be installed. And we have a block of accounts receivable north of $20 million. We have for COVID testing, where we have initiative with the government. There's a chance we could come into a very large block of money soon. So thank you for the question. We're not currently raising capital. We're good for now. I can't guarantee the second half of the year. At some point, we may not raise money again, but right now we have several other avenues that are more likely for us to get in large blocks of money. And as I said, as we enter the second half of the year, our quarterly numbers are going to go from losing a bunch of money to ultimately late in the year breaking even to then making a lot of money. In the meantime, there's enormous value in our various assets under development. Anything else? We're good. Thank you very much.